Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Thursday, January 29th, about 6 a.m. Central Time. I want to give my thoughts and prayers to those impacted by the American Airlines plane and the Black Hawk helicopter that collided last night. I saw the details all over the financial news networks here last night into the early morning. So my thoughts and prayers go out to them. So looking at the markets here overnight in the precious metals, they are higher after yesterday's surge in metals. Following the Fed meeting, we saw the gold contract roll over from February to April. So if you are trading that particular contract in February, be sure to go over there to avoid any kind of delivery intentions. Now, if you're in silver, chances are you're in March. You've got plenty of time to go. And then if you look at the way a lot of these contracts set up, there's a lot of stories that are circulating following London and a shortage on gold here. So that's why it's really important a lot of times if you're going to get like that silver squeeze, you really want to be in the front month. You want to be in the March contract where it's impacted, where supply is not able to come online and fulfill short-term needs. That's why if you're trading natural gas and you're playing a polar vortex, it's important to play the front month contract for those reductions and those strains in supply and not go 6 months out. If you're playing geopolitical headlines, you play the front month in the crude oil market as it's most impacted by that. And a lot of times these situations are resolved multiple months out. And that's where you see a disconnect and you see the front month rise a lot faster than those back months. So looking at a recap here of yesterday and kind of the reaction of the Fed meeting, the Federal Reserve Chairman Jerome Powell said officials are in no rush to lower rates, citing that there's a strong economy, and he's citing the need to see further progress on inflation. So when he said that, we did see gold futures back off just a little bit here. The Federal Reserve Open Market Committee voted unanimously to keep the Fed funds rate in a range of 4.25% to 4.5%. And Powell suggested that the Fed could remain on hold for some time. So he's really concerned about inflation. That's what I'm seeing here. And then he's also waiting to see how President Donald Trump's policies on immigration, tariffs, and taxes are going to impact the economy before making further adjustments. So what he's concerned about is that inflation is going to rise and that the economy is starting to lose some steam and falter. What type of an environment does that create? It creates a stagflation environment. That's where the Federal Reserve is really pigeonholed against being able to do anything, despite what you hear from Donald Trump here and some of his attacks on Jerome Powell here yesterday after the meeting. Stagflation is the perfect environment for the gold market. It's probably one of the best trading environments that is favorable to higher prices if you back test it. You don't want to see inflation coming down and the global economy, the US economy rising, because what that'll do is it'll make them in a complacency zone or even furthermore slightly pivoting towards another hawkish position. Got the Wall Street Bets mug going on here this morning. So potential squeeze going on in silver over $32. So I had to prepare with the mug. But getting back to the gold market. So gold gained about $2 yesterday. You look at the overnight price action, up about $22, trading at $28.16. High of the overnight, $28.19. Low of the overnight session, $27.94. So it kind of jumped and took off from there. It slipped a little bit when Powell was slightly hawkish here, but really we're going to have to wait and see how things play out. Now, the reason for the Wall Street mug here and the squeeze type of talk is that we're seeing a surge in gold shipments to the U.S. It's leading to this shortage of gold in London. So traders amassed about an $82 billion stockpile in New York over fears of the Trump administration tariffs. This is really a story I'm following, and a lot of people are asking about defaults on gold in London. So kind of the news headline goes like this. Gold exports from the U.S. to the U.S. from Europe's central refining hub in Switzerland. They jumped to the highest since the Russian invasion of Ukraine as traders scramble to bring bullion ahead of potential tariffs. So if you look at Switzerland, they shipped 64.2 million tons of gold to the U.S. in December. This was the most since March of 2022. Normally, they'll ship those over to London or closer areas. Sometimes it makes its way, especially the illegal gold that's mined in Africa. It'll make its way over into the Middle East, then it'll jump over to Switzerland, then it makes its way over into the US, or it ends up back in the Middle East. Now, what's going on is that we're seeing 11 times more gold being shipped over into the US than previously before. So gold prices in New York on the COMEX, they're surging to a premium over the international benchmarks, and this has really started to disconnect starting in December, and it's really broke out. Obviously, they fear the tariffs, and what's happening is that this short premium here that we're seeing is really starting to take waves. So the premiums of more than $50 an ounce for COMEX futures over spot prices in London as these markets get going, it creates this arbitrage opportunity. That's why I don't believe that you'll see this squeeze play out where London's going to default or something like that, because of the fact that what they'll do is they'll start shipping back into other places, or they'll reverse the process once we come past February 1st and we see how Trump's tariffs play out. Things will start to unwind and go back, and you'll see premiums start to converge again. So looking at the silver market, it did add 69 cents yesterday. It's up about 63 cents here right now. Those of you that are trading with us are going to actively be rising your stop losses and practicing prudent risk management. You really want to avoid chasing. And if you have the FOMO, because silver's trading at about $32 right now, and you're going to start to add to positions near the top, what you really want to do is have a risk management plan. So on any type of market, it doesn't matter what it is. If you're going to buy the breakout or buy the top, what you want to look at is kind of the average true range, but perhaps take 1.5 or 2 times that. That's where you come up with some stop loss placement or some risk management type strategy, and you monitor it from there to see if you get the continuation in the direction that you're looking at. So if you look at the gold silver ratio, it's dropped from 90-1 just a couple days ago to 88.5-1. That was after the Fed meeting. Now we're sitting at about 88-1. 87.5-1 as of this recording. So you want to check in here on the other markets, because we do have a surge in the other metals that are going on as well. So checking on your industrial metals, and sometimes silver does slide into this category. You got copper adding about 4 cents here, trading at about 4.30 at the moment here. You do also have platinum adding about $20. Broke that $1,000 mark. So I saw a lot of people that buy around the 900, just below the 900, and play this $100 range. They really exited quite a few positions up at that level. Now remember, if you would like to open up a futures trading account with Blue Line Futures, it takes about 10 minutes to complete an online application. Some people do it in about 5 minutes. Or if you're a QEP, which is a qualified individual participant, and you'd like to know more about our fully managed accounts, please email info@bluelinefutures.com. We'll send you a link to help you get started here and some additional information. Now, turning our attention to the outside market and starting with the energy markets, looking at oil and natural gas, looking at oil prices a bit softer, natural gas prices a bit higher. We did see U.S. crude oil inventories. They rose for the first time since November, with the stockpiles building about 415 million barrels. These inventories are now sitting at the highest level since late December. That's why you got crude oil futures breaking down here just a little bit and pushing lower here. Many of you that have been long crude oil futures on the breakout to the upside got close to 80, took positions off, took some short positions with stops over the 80 mark. Now are looking to cover those markets between that $70 to $72 range, which was where the breakout zone was at. Shifting your focus to yields, the 10-year benchmark, and also the FX markets. We do have the dollar up about 11. It did recapture 108, a little bit softer here. We do have an ECB meeting coming out. You are seeing the euro currency a bit softer in the overnight session. We'll see how that plays out. That's an early morning impact on that market, and it will impact the dollar. It will impact rates, and it will impact the metals markets as well. Now, getting into the crypto space, you do have Bitcoin up about $1,200 at 106,390. Excuse me. You also have Ethereum up about 100 right now at 32.59. Ethereum's really been a lagger and been very complacent at the moment. Jerome Powell said that banks are perfectly able to serve crypto customers yesterday at his press conference. So you saw Bitcoin go from 102,000 on up to 105,000 on that news. I think that clears the airwaves for another reach to 110 and a breakout potentially above there. Now, looking at today in the schedule of different things coming out, you do have the Eurozone, the ECB rate decision, consumer confidence, the unemployment, GDP, that's all coming out here on Thursday. Then tomorrow you also have jobless claims as well. You'll have Apple, Deutsche Bank earnings as well. And then tomorrow you've got that personal income spending, PCE data, the employment costs. So you're really going to want to watch how these markets continue to follow throughout the day. You want to see silver futures not look back and break below the lows of the session. You want to see the equity markets not break below the Fed lows yesterday. And that's really kind of when you have this meaningful impact like what we saw with the election. You didn't want to see the market retrace that level lower here after the election results came out. So use those as your higher lows on the charts and also your risk management. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.